Okay, so for today, we will be covering on Forex trading strategies specific to Bollinger Bands. So if you guys have any questions throughout the session, right, please feel free to put them under the questions chat. So just a quick introduction of myself. I'm Li Sing. I provide FX advisory to institutional clients. If you have any questions when you're watching the recording, right, please feel free to reach out to me on LinkedIn as well. So just a quick disclaimer, the information presented here, it's not to be treated as investment advice. It's for educational purposes only. So that we will be covering for today, right? First, we will take a look at Bollinger Bands in terms of what it does. So if you recall in our previous session, right, we covered the basics of Bollinger Bands and how we can interpret them. So for this session, we'll be taking a look at Bollinger Bands breakout. We will also be going on to TradingView, right, to look at specific chart examples with regards to that. Following which, we will take a look at Bollinger Band trend reversals, right? So of course, Bollinger Band by itself, it is an indicator. So as with all other indicators, right, when we're doing our strategies or setups based on it, it's also important that we ensure that we're doing proper risk management. So not over risking on one trade or risking too much of the percentage of your equity of the account. Okay, and following that, we will take a look at Bollinger Bands with analysis as well as volatility. So for Bollinger Band, there's this squeeze, right? So essentially when we see both bands narrow, what happens following which is that we can generally expect a much wider volatility following that squeeze. So we will take a look at, again, examples on that. And we will also be combining Bollinger Bands across different time frames, right? So just so that we can see how we can apply them across the different time frames. And finally, we will be summarizing what we've learned so far. So in our previous session on Bollinger Bands, right, when we take a look at trend reversals, you can see that there are a few things that we can note. So this specific example that was covered, right, we combine Bollinger Bands with other indicators like our oscillators like RSI and MACD. But the general idea is the same, right? So a few things to note on Bollinger Bands. It's that when you take a look at this, right? So this is actually Bollinger Bands here. So you can see that there are two bands, right? You have your upper band and the lower band. So this is two standard deviation. And this middle line, right? It's our moving average, right? So this is a 20 SMA, so simple moving average that tracks the previous price, and upper band and lower bands are two standard deviations away. So essentially 90% of the time we can see that price holds within this upper and lower band, right? So how we can interpret this just based on the basics of Bollinger Bands is that when price comes into the resistance or the upper channel or the upper band, right, we can expect a reversal below this, and vice versa, right? When price comes into the lower band, we are expecting a bounce above this area. So that's how we can look at upper and lower bands. Another thing that you can note is the middle band, right? So this is essentially the 20 simple moving average. So another way to look at this is that when price comes into the extremes, right, of this ends, right, and either testing your upper band where we're expecting a reversal below, or the lower bands where we're expecting price to push higher. In such case, across above your moving average, right, or your middle band. So this is the moving average, right? So it has similar concepts to how we use a moving average. So for moving average, it basically tracks the average of past number of periods. So when price crosses above the moving average, right, generally it's a bullish signal, and vice versa, when price crosses below the moving average, it's a bearish signal. So in this case, right, we can actually use the same concept. So when price comes into the lower band and we're expecting a push up across above, this moving average itself would provide a confirmation or a bullish signal. So of course, this is just trading solely in isolation using Bollinger Bands, right? Accompanied with that, we want to ensure that we are trading in the direction of the trend. So for direction of trend, you can actually take a look at market structures to help you to determine the direction of the trend before taking a position. So in this example, right, again, if you see this area, we saw how price consolidated in this zone, right? So let me just So this area, we saw how price consolidated here, moving sideways before it breaks below, right? So once there is a break below this area, a break below, right? In terms of structure, you can see that price broke the previous low. Once we're seeing that break below this area and a retest of the zone, what happens following this, right? So this, if you're looking at support resistance concepts, this is basically a break of the last support area. Price retested as a resistance. Coming into the zone, you can see that price, so this itself, right, is showing bearish market structure. So when price comes into the upper band, you can see that this upper bands can serve as entries, right? So they can be signals for entries before price continues to the downside. So notice that when you're in a bearish market structure, right? So when prices start forming lower lows and lower highs, you can see that the previous lows are being broken, right? In such cases, this upper bands itself, right? The signals generated from the upper bands would hold more weight. Whereas if you take a look at the signals that are generated from this lower bands, right? Whenever price comes into the lower band, it's just doing a slight reversal over here, right? So once again, we're seeing this area here, right? So until there's a break in structure where price broke above the last high, you can see that any signals generated on the lower band, it's just doing a slight pullback before price continues to the downside. So as with our other indicators, right? So previously we talked about in the RSI series, we talked about focusing on the overbought regions when prices are forming higher lows and higher highs, right? So if prices are in an uptrend, an exit of the oversold region itself would provide a good opportunity to for a long, right? Whereas if prices are in a bearish trend, then we want to focus on exit of oversold region, because any exit of the region is just continuation of the trend to the downside, right? Ideally. So in this case, right, we can see that when price starts forming your bearish structure, any tap of this upper band for our Bollinger, right, itself, this would generate the bearish signal. Okay, so this is one strategy that we can look at, essentially looking at zigzag patterns or identifying market structures before that. And these market structures would be your first filter for the direction of the trend. After you have determined the direction of the trend, right, we will determine what are the areas that we want to focus on. So in a bearish trend, right, any signals for a sell would be generated by price coming into this upper band, right? Of course, this is the most ideal scenarios, right? There are also cases where price breaks above, right? So you can see in this case, when we're in a bullish structure, bullish market structure. So if I were to paint out the structure, you can see that this area here, prices start forming higher lows and higher highs coming into the zone, right? So if I were to mark out the highs and lows, you can see that the lows are not being broken, but we are seeing subsequent higher lows and higher highs. So in this case, right, when we have this development, right, how price develop over here, what happens is that you can see even though price comes into the upper bands, right, so this upper bands, and we're expecting that reversal, you can see that this reversal itself, right, or rather this pullback is extremely small, right? So we're just seeing a slight pullback before price continues to the upside, and once again over here and this area. Okay, so this is something else that we would I would like to highlight, right? So essentially when prices are in a bullish structure, it's forming your uptrend, right? You can see that any tap of this upper bands itself, they are just pointing to a slight pullback before price continues in the direction of the trend. So in an uptrend, right, likewise, we want to focus on the bottom bands, right? So the lower bands, essentially if price comes into the lower band, like in this example, you can see that price came and tapped into the lower band. And following that, it's represented by a bullish candle, a strong bullish candle representing strong buying pressure. And also this bullish candle crosses above the middle band, right, or your simple moving average. So this crossover can be used as a confirmation, as a bullish signal in an uptrend. So if prices start forming higher lows and higher highs, and you can see that price respected and bounced off the lower band, and a crossover of this orange line or this middle band, right, the simple moving average, right, can be used as our bullish confirmation. So in extreme movements, right, so when prices are forming strong, it's showing a strong uptrend, you can see that sometimes prices barely pull back to your lower band, right? So in this example, you can see this area, prices comes back into the resistance turn support level. We saw that rejection once, price broke above it, retested this region. So this is a resistance turn support area, but you can see that while price acknowledges this area, right, came and test the middle band, it did not actually pull back into the lower band that we have here. So again, in a strong uptrend, right, we're expecting that upper bands itself, right, can be violated. You can see that price came into this zone, right, and even though it came into the upper bands, we're seeing a bigger move up before a slight retracement here. Okay, so once again, right, so if you are to just track in terms of the market structures, right, just looking at zigzag patterns, right, painting out the structure, you can see that the break of the structure, this area, right, the first break of this low, it's the first indication of a bearish signal, right? So that's when we will want to focus on the upper or lower band. So if it's a bearish signal, we want to focus on the upper bands. In this case, when price comes into a support region, you can see that there is bullish structure, right? So in terms of your zigzag patterns, it's forming higher lows, higher highs. The lows are not violated. In such case, when price continues to push higher, what we want to see here again, right, in a bullish structure is to focus on your lower band. So you can see this, right? So in a bullish structure, we know that this upper bands, right? So like market structures, right? These highs themselves are constantly targets that you can use for take profits. So these highs themselves don't serve as good entry because in an uptrend, you can see that the highs are constantly violated. So there's a high chance that price will just continue to the upside. So in this case, right, we want to focus on the lower bands. You can see that price again tap into the lower band, push back into your upper band here. And you can see what happens after, right? So this is one. So of course, along the way, we will have to manage our setups, right? So trade management is also important. So when price comes into this zone, you can see this low, right? This is we have as the last low that was being formed. So the assumption is that if price were to continue on an uptrend, right? So if prices were to continue higher, what happens is that we're not expecting this low to break. Okay, so if price breaks and close below this low, you can see over here, first sign of your test, price testing this region, right? Breaking and closing below this. What happens after the break is that you can see once again, right? The upper bands would then serve as your entries. Okay, so this is the general idea for Bollinger Bands, right? Of course, you can also combine them with other indicators, right? So in this example, we took a look at RSI and MACD. If you want a deeper, a more extensive example on this, right, just refer to our previous recording. Okay, so this is on Bollinger Band trend reversal, right? So in general, when prices, especially if it's trading in a range with no clear direction, right? So in this example, you can see that prices are in a range, right? It's moving sideways, essentially respecting both a support and resistance level. In this case, what happens is that usually the upper and lower bands would be areas that you can consider for entries, right? If prices are trading in a range, if we're waiting for breakout trades, right? So if prices are trading in a range, right, in a normal breakout trade, just based on support resistance levels, you can see that we're waiting for a break and close above the region and a pullback into the area for more upside, right? Especially if the market is showing bullish order flow. In such cases, right, this, if you have to paint out the Bollinger Band, right, this is actually within the band, right, the upper lower band. And once price breaks above this area, you can see that the upper bands would be broken, right? So price might exceed the upper band before doing a slight pullback. Okay, so this is on Bollinger trend reversal, right? So apart from using looking at Bollinger Bands just in terms of the upper and lower bands, right? Or looking at just continuation patterns or reversal in general, right? What we can also take a look at would be on the breakouts of the bands, right? So for Bollinger Bands, right, even though price stay within the upper and lower band, most of the time, right, what we want to consider is that when price breaks above this band, right, so it suggests potential move to the upside. So what I mean by this is that if you take a look at the same example, right, so if price comes into this zone, we can see that price over here, right, it broke above the upper band. So most of the time it will stay within the band, but we should be seeing that reversal. But in this case, you can see that price exceeded the upper band over here, right? So the subsequent candles actually broke above this upper band. And following that, what happens is that we can see that when there is this breakup, right, and price close above the upper band, especially in an uptrend, right, this can be a bullish confirmation for more upside. So if you are trying to take or code strategies, right? Just based on Bollinger Bands, right? Any exit of the upper band when price breaks and close above the upper band, right? We can monitor the next candle, right? Or even down the lower time frame. You can also take quick 5 to 10 pips scalp on these moves. Okay, so essentially taking very short-term trades, keeping the stop loss tight, playing this slack move up. Of course, again, right, this have to tie in nicely with your market structure, right? Whether it's a bullish or bearish market structure. So one way to do this, right, is to place a buy stop. So in this case, right, if you are intending to play a breakout of this trade, right, what we can do is to play a buy stop above this upper band. So take a look at this example, right? You can see that when price exits the upper band here, right? So the first sign of a bullish signal is when price breaks and close above the upper band. Following the break and close above this region, what we have is that when price breaks and close above, right, you can put a buy stop above the last high of the candle close. So when price continues to the upside, right, this buy stop is triggered. Okay, so the buy stop can be placed here, right, just based off the previous candle's high. The stop loss can be based on the previous candle's low, right? So this is the range that you're limiting yourself to. The idea is taking a quick scalp above this area, right, on the breakout. Of course, for this to occur, price needs to be in an uptrend, right? And this huge move that we have here. Following this, right, if the buy stop is being triggered, so essentially you have an open position, right? When price is being triggered, what happens over here, it's that you can either trail your stop loss based on a certain number of pips, right? So maybe 5 pips away from the current price movement, it can be trailed, and also shifting your stop loss to break even. So once this is in your favor and profit, right, you want to shift your stop loss up to break even. Okay, so in this case as well, you can see this area here, right, price breaking and closing below this zone. Once there is a break in structure, price broke and closed below the lower band, right? This can be interpreted as a bearish breakout. You can see what happens after, right? So if it's a sell stop that's being placed below the low of the candle, you can see that there is the subsequent candle, right, pushed through again below the lower band, right, before price continues to the upside. So once again, you're seeing the example. So when price breaks and close above the zone, you can see this area here, right? So when price breaks and close above the upper band, right, you can see the subsequent candle. So the stops itself can be based on the previous candle's high if you're bullish, and based on the previous candle's low if you're bearish. So the idea is that if price continues to the upside, right, your buy stops would be triggered. And likewise, right, if price continues to the downside, right, your sell stops would be triggered. So this is to the idea of a breakout, right? So assume that, imagine if prices are trading within a range, you're seeing price move sideways, right? So there are a few ways we can play this breakout, right? So the first way would be basically buying at every support level, selling at every resistance level, right? But this is more of a straddle, trading within the range. Another way would be to wait for price to break through, right? So if it breaks and closes below the zone, a pullback into this resistance area, right, then you might want to enter a short position here. That's one. The other way is if price comes strongly into this. So if prices are trading sideways and because of a news event, maybe with CPI data release or interest rate decisions, right? If price comes into the support area and we're seeing a strong break or bearish move below this area, below the support level, right? In this case, there might not be any retracements or any pullback back into your zone here. So in this case, if there are breakout traders that are trying to capture this strong move down, especially if there is a news catalyst for it, what happens here is that usually buys and sell stops will be placed here. So when price breaks below, right, this sell stops will be triggered. So essentially the sell positions would be open. Likewise, right, when you have buy stops that are being placed above, right, this buy stops would be triggered. So when price goes above this area, if it breaks above this zone, right, then this buy stops are triggered. So in an event of a news release, right, when price goes straight through this resistance area, then in such cases, right, this buy stops would actually be good potential entries. Okay, so of course, this is one, right? But along with the buy stops and sell stops, there are also stop hunts. So essentially, if there are a lot of liquidity lying just slightly above, right, these areas, then these areas themselves, right, can serve as targets, right? So you can see that this usually would be represented with wicks. So price coming into a resistance area, we saw it test this zone multiple times before it wicks above, right? So in this area, for example, you can see price coming into a resistance area here. It broke structure, right? So once price breaks structure, right, we can expect the last high to not be violated. So you can see in this case, price came back into this area from what we call a double top, right? So double top over here. If the preceding trend is bullish, right, double top. And what happens following that is that you can see that there is this wick. So essentially price wicked above the previous high before it continues to the downside. And this wick itself, right, especially if it's represented by a strong candle, tapping into the highs before an equally strong rejection of this area, right? This forms our order block, right? Or essentially, these are areas where price came in, right, and tapped into areas of liquidity, essentially orders that are lying slightly above before it continues in the direction of the trend. Okay, so when you have a break-in structure and this price action is being observed, you can see that at this area, right, which caused the spike up, right, there are two things, right? So one thing to note is that market makers, right, or bigger institutions, they're holding on to the buy positions, right, pushing price higher to tap into the area of liquidity. And this would also mean that any buy positions that we have when prices are pushing lower, right, would be in a loss. Okay, so these areas can then serve as areas of entries. Okay, so that's on breakouts for Bollinger Bands, right? So we took a look at entries and exits in terms of trend reversals and breakout. Another thing that I would like to highlight on Bollinger Bands, right? So for this, let's hop onto our charts. Just remove these drawings and bring out our charts. Okay, so this is a chart. Let me just load this, right? So let's just clear these drawings and take a look at Bollinger Bands. Okay, so when you take a look at Bollinger Bands by itself, you can see that there is this area, right, a period of low volatility. So what we mean by low volatility, it's essentially price coming together, right? So this areas here, where we're seeing that squeeze in Bollinger Bands, right? So price trading within that range, you're seeing that movement, right? No clear direction, you're not seeing clear market structure, and prices are basically trading sideways. There is this, if you draw a horizontal line across, right, there's a support resistance level that's being respected here. So that's one, right? And when price trades within this region, once there is a break of this area here, you can see that this squeeze on Bollinger Bands, right, usually represented by very small moves, it's accompanied with a huge move following that. Right, so when we're seeing this squeeze in Bollinger Bands, right, or periods of low volatility. So again, if I were to just scroll back slightly, you probably see the same thing here. Right, so periods of low volatility, price basically trading sideways. You can see this area. Price trading sideways over here before we see that huge move down. So when we have periods of low volatility over here, right, you can see that following that, right, we can expect price, right, when the band expand, right, it'll be followed with periods of much wider or larger moves. So again, right, if I were to just move back, you can see that again we have the squeeze over here, right? So price essentially trading within a narrow range, and once the squeeze it's over, right, you can see that this is accompanied with a much wider move. Okay, so how we can use this in our analysis, right? It's two ways, right? So based on trend, if you're doing trend following strategies, right, you can see that if you have used the zigzag pattern to determine the general direction of the trend, right, any squeeze that we're seeing over here, right, periods of low volatility, right, if we can expect price to push higher after, right, this periods of low volatility can be a signal, right, for a potential, a much bigger move in the direction of the trend. So this is for trend following strategies, right? So when there is a clear trend or a clear direction of the trend, right? So in the form of market structure, higher lows, higher highs that are being formed, when this periods of low volatility comes in, right? So the squeeze that we're seeing over here, you can see that there are two ways we can interpret this, right? So either keeping, so when you see the squeeze, right, and you have the direction of the trend being established, we can place our buy stops above the zone, right? Because what happens after is that we could potentially be seeing a much bigger move up. So these are areas that you want to consider activating your buy stops if you're bullish and sell stops if you're bearish. Okay, so that's one. And the other thing is also our stop losses, right? So stop losses can be placed below the previous low or below the lower band. So in an uptrend, right, when this move up happens, right, we have this huge volatile move, right, following the low volatility period, right? Then this areas itself, when this move happens, you can see that it's very fast. And at the same time, right, in an uptrend, you can see that the upper bands themselves don't hold, right? So price can actually break and close above the upper bands. So in an uptrend again, right, if you're activating breakout strategies, then this is where this would be useful. So generally for me, right, Bollinger Bands or even any other indicators for that matter, right, what it's important to note is first determine the general direction of your setup, right? This can be based on market structures. It can be based on zigzag pattern, right? So the idea that when prices are in a bearish structure, it's forming lower lows and lower highs. So once this is established, right, you can focus on either the upper or lower bands, right? So if price comes into the upper band in a bearish market structure, right, this can be potential sell signals. Likewise, in a bullish market structure, when price breaks above, and again, in this example, you can see that when price breaks above the high, so you can see that when price breaks above this high, let me clear the drawings, right? So in this case, you can see that when price broke above the last high, we're seeing a pullback into this zone. Then what happens is that this lower bands would then serve as entry. Even though price it's coming into the upper band, you can see that in a bullish market structure where prices start forming higher lows, higher highs, or your last high it's being violated, right? When that happens, you can see that this upper bands don't hold. And rightfully so, right? In an uptrend, right? You can see that these highs themselves are constant targets, right? For profits, but they don't hold for entries, for sell entries. Okay, so in this case, right, when you have a strong uptrend, you can see that price barely pulls back into the lower bands, right? But once it pulls back into the lower bands, then this serves as entries as long as this uptrend is still intact. Okay, so if another way to look at it is of course looking at the cross above this SME, simple moving average period. When price crosses above these areas, then this zone themselves can again be a bullish confirmation. Okay, so this is on Bollinger Bands, right? In terms of how we can look at it just based on trend reversals, and also looking at it from a breakout setup perspective. Okay, we also covered on Bollinger Bands in terms of width and the volatility, right? So whenever if we're seeing a low volatility period, essentially when prices are trading sideways and this squeeze, right? So the idea of a squeeze is basically the range between both bands, the upper and lower bands, are extremely narrow. You can see this area, right? So low volatility periods, the range are extremely narrow. Whereas if you're in a high volatility period, just clear these drawings. Right, so if prices are a lot more volatile, you can see in this case, right, when it's a lot more volatile, these areas, right, the range that we have between the upper and lower band, it's a lot wider, right? So if you take a look at the highs, take a look at the low, you can see that the range between the upper and lower bands, they're much wider. Okay, so that's what we have in terms of Bollinger Bands, right? So as we have covered, right, in our agenda, so we covered on Bollinger Bands in terms of how we can look at it just based on the reversals, right? So in general, when price comes into the upper bands, right, it should stay within the upper band. We could see a reversal. And likewise, right, when price comes into the lower band, right, we're expecting a reversal of that area. And 95% of the time, prices are holding within the band. This middle band that we have over here can be used as bullish and bearish confirmation. So if price taps into the lower band, right, and we're expecting price to continue higher, if you're more conservative, you can wait for a break above this middle band, which is also a moving average, right, before price continues to the upside. So that's one, right? And it would be even better if you can combine this Bollinger Bands together with market structures, right? So looking at higher lows, higher highs, right? It can just be tracking any 5 points, looking at the previous low. So if price breaks below the low, then it's a bearish market structure. That's when we want to focus on entries from the upper band, right? So signals generated from the upper band would then serve as potential entries. Likewise, right, when the last high that we have, it's broken, you can see over here, price broke above these areas, then that's when we want to shift the focus to lower bands as potential entry signals. So that's for trend trading, right? If you're looking at breakout, right? So breakout trades are much shorter, right? So in this case, if you're in an uptrend, right, when price breaks above the upper band, right, buy stops can be placed above the upper band, right? And once that's triggered, you trail your stop loss more aggressively. Okay, and then finally we talk about volatility and with analysis, right? So if price comes in, or if we're seeing this range narrow between the upper and lower band, then in that case, right, usually what we can see following that is huge volatility, right? It's accompanied with big movements. So in this case, right, this could be just from a technical perspective, right? If you look at it from like price action on Bollinger Bands, right? This is just looking at how when price or the range between them narrow, right? It's following which you can be seeing much higher volatility, right? It could be from a fundamental perspective, right? News catalyst as well, right? At a point in time, right, we could be having key data release, be it your CPI or interest rate decisions. Okay, so as with any other setups, right, as with any other indicator strategy, right, what's important is that we do not over risk in one trade itself, right? So it's important that we do proper risk management, right, and even trade management. So when price comes into this zone, right, if the positions is in our favor, right, how do we manage it? How do we trail the stop losses, right? So these are areas to consider. So in this specific example, right, on trend reversal, right, it can be anywhere between using the lower bands as signals and also putting stop losses just maybe a fixed number of pips away from the previous low. It can be based on the ATR. So ATR is an average true range, right? Based on a certain number of periods, default is usually 14, right? So it can be based on that. Or it can be based on just maybe 10 pips away from the previous low, right? But in that case, this would be slightly trickier because if your currency it's more volatile, right? 10 pips on, let's say, euro dollar as compared to 10 pips on franc yen, right? Yen pairs are generally more volatile. So in this case, right, you might want to consider widening it. So in this case, it would probably be better to base it off average true range, right? So essentially the ATR. Okay, so that's what we have for Bollinger Band series, right? I hope that this session has been useful. If you have any questions, please feel free to put it under the chat box or Q&A box, right? So I'll just leave this there for a moment. And one other thing, right? So for those of you guys who are asking for the recordings of the previous session, right, you can actually go to Vantage YouTube page. So we do have recordings of the previous session. And if you want to sign up for the webinar, just go to vantagemarkets.com/webinars, right? We do have the schedule as well as the speakers there. Okay, so if there are no other questions, that's what we have for today, right? So thanks everyone, and we will catch you guys again tomorrow.